All right. I am here with Jennifer Pereira, the founder and managing partner at Celestial Group. How's it going, Jennifer?
Excellent, Steve. Great to see you.
Yeah, I'm excited to really unpack, everything about, acquiring cash flowing businesses and what you guys look for. But before we get to that,
hmm
let's talk about your background. What's your history and what got you into the space?
Thank you. So I'm gonna dive right into that, and I just want to give a shout out to all the entrepreneurs across the planet that are tuning in. I know Flippa has an incredible audience. I love the Exit podcast, and I just think that the entrepreneurial spirit is literally what drives the economy. The crazy ones that are out here just doing, breaking the rules and really going after their dreams. I just want to shout out to all of you, say how much I appreciate you, and that we're just built different. Thank you for tuning in, and I'm happy to share all I know to make your journey as easy as possible. So my background, spent a long time in very corporate enterprise spaces in IT project management. And we're like, how is that related to M&A? The ability to track, implement, project lead, and observe implementations from start to finish of very large technical projects really wired my brain around systems thinking. And I will apply this later on in the conversation. So spent tons of time, over a decade doing that. I left after I had a massive health crisis in 2013, and inside my own entrepreneurial journey have run a digital brand consultancy, went on to start a psychedelics company. That psychedelics company opened me to the world of venture capital. Venture capital opened me to the world of private equity. And I'm now running a portfolio of several brands in our own private equity firm, Celestial Group, along with many other private investors, and focusing on the M&A game.
Nice. Very nice. I think there's a lot of cool perspectives that you have being on both sides of the equation, because people listening to this are mainly operating businesses or looking to potentially buy one. So I think you
Right.
give a really cool view from both seats. So let's first talk about the Celestial Group and kind of how that got started, and kind of how you look for these different businesses, because I know a lot of people listening to this have their own criteria. I've met some pretty incredible people that have some wild criteria as to what they acquire, and I'm
Yes.
just curious as to what you look for.
Yeah. Okay. So Celestial Group started because I thought I wanted to be a venture capitalist.
Mhm.
And once I discovered that venture capital is really moving institutional money, and generating returns off the backs of startups and or innovation, and I really actually understood what it was to run a venture office, I saw a paradigm that I feel is broken and sincerely needs to be shifted. I don't necessarily like how it operates, and I decided to change that. And I saw that slow growth and patient money and acquisition was actually the way forward. I learned a lot about private equity through a business partner that I attracted, Camilla Lastine, who is absolutely a genius in this area and has really helped form and shape our journey today and why we decided to pursue private equity. So, it starts by just looking at one small business at a time. You might look at 1,000 deals to land on one, but it's really honing in on learning the ins and outs of what makes a good transaction, and then doing a deal, getting something under your belt, learning to work with maybe other people's money, whether it's SBA loans, whether it's investors, whether it's your own capital, how and when to apply. So we kind of took the slow boat and really built out our own office first, and systems and processes, and understood regulations for working with investors, et cetera, and then really started our search. And people also, a little hot tip for everyone listening is differentiate between buying assets and buying a business, because you can buy assets and roll them up into a business entity that you might have, or buying a business is also taking on their liabilities. So we had to learn a lot of those ins and outs before deciding on what deals to do. We've landed very heavily in the digital products space, e-commerce and e-learning, because I hate supply chain. I don't want to deal with inventory stacks or anything that's cash heavy. But that was after a lot of learning and tons of trial and error.
Yeah, yeah, and I think in this day and age, there's such an interesting approach, because you have all the data there. There's not like a stack of of binders, in the old school days of going through small businesses and everything. E-commerce, Shopify is literally you can plug it in,
Right.
and it's not um, it's not as sort of fragmented as it used to be. It's all just right there on a dashboard, and it's really clean cut. So I wanted to unpack the private equity for the people piece. Like that's a really
Yes.
fun slogan. And as I was digging in a little bit more, I was curious as to how that came to be. Like what the mission there, how that started, because I think it's a fascinating concept of kind of democratizing private equity. But I'm curious how that started and what it is.
Thank you. I wish more people picked up on this and understood that we actually are a mission-based organization, and started that way and have really grassroots heart at the start of everything in Celestial. I mean, ultimately, when stars link arms, that's how constellations are formed, right? And that's the whole point of Celestial Group. So inviting other people to the table. So after starting my entrepreneurial journey, I had a small amount of cash. Like, different things happened in my life with the movement of some assets, but it wasn't life-changing money, but it was enough money that I knew that if it was applied correctly, I could actually do something with it to set myself up for either a legacy, a retirement, and or just the ability to do what I wanted. And in my case, that was to be financially free at 40. That was the big goal that I had. And financially free meaning like not being free of finances. And the mindset shift and the manifestation of how we use our words is very important, but the ability to freely move my finances around and or not be tied to like a 9 to 5 paradigm. I wanted inflowing income or anything that I was making off my investments or assets to cover just the day-to-day expenses or lifestyle, so that I could actually live out creative genius or purpose in the world or assist others. And I think every entrepreneur at their heart ultimately has some sort of similar cause. So when we first started out, we took a lot of different turns as to how this all came about. Steve, can you just remind what's the exact point you want me to make here? I want to
We
nail
were mainly about the private equity for the people, like
people.
how
Yeah.
how that came to be.
Yeah, totally. So we took a lot of different angles with it, and it was this movement of money and myself and my business partner. Thank you for that. And so I started talking to investment managers, and as I said, I thought I wanted to be a venture capitalist, and no one could really help me with the objective that I had, because a lot of money managers and investment managers are trying to sell you a product like a mutual fund, or put some money into a long-term savings account and then put some in these stocks and then put some there. And no one tells you that they're making commissions off the products that they're selling you. And there's just a lot of rigmarole around the application of finances for the average person. And we stay stuck inside these systems and these paradigms that aren't actually helping us. So I started just looking into what are other options. And I learned about what's called alternative asset classes, in which private equity is one of them. And really all that means is private money moving through different assets, such as small, medium, or large size businesses. And I was like, well, why didn't anybody tell me that I could buy a business or invest in them, but not as an angel investor? So not playing the startup risk game, literally talking about owning Susie's coffee shop, owning Bob's car wash, owning, Doug's e-commerce sports goods, all of that, and moving our money in that way. And then that cash flow and that profit is distributed amongst the owners and or the shareholders, right? So this is not common knowledge. And I was kind of pissed off. It's like, okay, unless you're sitting at like the Waldorf, in NYC, and happen to bump into like a basketball player who's buying 25 Papa John's, and you have access to that network, or, you're a private wealth client over at JP Morgan, yada, 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 you don't get access to these portfolios. People aren't walking down the street telling you about these deals. So we had to build everything on our own. And once I really understood it, my business partner and I was like, well, one way to attract, other people's money so that we have the appropriate funds to actually do this correctly is to get them in on it and help them and change lives. And, let's see how many women and or people we can asset back in the short amount of time that we're going to give us to buy these small companies, so that they actually have assets to their name, are receiving residual income, And essentially their lives and their paradigm around wealth and or business ownership is shifted as well. So that's what we did, and it became a wildly popular concept. We started a small community around it. We'll not there yet, but we'll be building out a newsletter and different things to help broader community with this, but just took it on literally as the mission and the heart of our organization. And then it actually started to spread into a social mission, because I just
Mm-hmm.
want more people to know that this is an option. You don't have to slave yourself to death like running or starting a business. You can buy one, and you can buy cash flow. And that to me was a wild concept, that
Mm-hmm.
by owning stakes in a business, I literally was then, if it was set up correctly, privy to that profit being a personal distribution to me and or my family. So that was a huge mind-blowing moment.
Yeah, yeah, I like the slogan, and it's very yeah, you can kind of tell the mission just from that. Like you can extrapolate what you're trying to do, and I like that because it is seemingly unaccessible, and that's why the benefit of things like marketplaces like Flippa. And I like the idea of getting everyone access to something that's, whether it's 5,000 or 5 million, it's
Yeah.
it's open, and there's a lot of opportunity, especially with boomers retiring and some of these sort of analog businesses that are not going to be passed down, that are going to come up for sale. I know a lot of
Mm-hmm.
people are talking about that right now. Huge opportunity there because people aren't aren't going to be able to pass it down, and they're going to go up for sale in mass. So I want to talk about on the sell side for a minute. What is it that you know you could share around getting prepared? Because I'd say half
Oh
the people
yes.
listening to this are operating currently, and maybe they're thinking about it in the future. But what types of things do you recommend for people
Mm-hmm.
to do to prepare themselves for an exit?
Right. So it's not actually about having the flashiest or coolest brand or being on trend or hitting a market curve in terms of what the populace wants and is buying. It's literally about having a business system in place. I'm going to say that again because the importance of it cannot be overstated. Business systems are mandatory for an exit. Do you have systems, processes, and procedures in place, documented, written, whether it's proprietary IP or not, just from everything from A to Z, how the shop operates needs to be recorded in a way that an owner can step in and potentially place an operator, because really the goal at the highest level is to not be an operator. It's great if you want to be an operator, I commend you, and you're just giving yourself another job.
Mm-hmm.
If you can hire competent operators, if you can give people skin in the game, you've not only created job opportunities for others alongside you at the top level on the cap table, but you've freed yourself up to actually really strategize and manage the business properly. So taking a systems view from A to Z of every single thing that happens inside the business is of extreme importance. And when you build your business and or set it up for an exit with systems think in mind, you actually attract very aligned buyers, because people that have a level of sophistication to do these transactions in a good way, meaning like they're not underhanding or shortcutting deals because they're finding inefficiencies inside the business, these are the things that they look for. Is
Mm-hmm.
there documentation? Is there systems? If employee XYZ is not available, is there a documented function relating to their job that we can place other people in? So we want to make sure the continuity is always available.
Mm-hmm. And to talk a little bit about timing, I bring this up pretty frequently, and I get a lot of questions around it, and I'm pretty fascinated by it because everybody's in different chapters of their lives when they're selling businesses. But on the buy side, shifting back over there, you know, when when would be the right time? Is it the, as you mentioned before, with like an e-learning product or a digital product, e-commerce company? Is it up? Is it flat? Is it trending down? Do you get a deal?
Yeah.
What is it that you kind of recommend with timing?
Mm-hmm. Well, I think everyone on Flippo definitely wants a deal. That's why we're looking at the marketplaces, and I'm such a huge fan of Flippa. I mean, it really depends. So this is a maybe not the answer you're expecting, but it depends on your tolerance and your resilience, not only as an entrepreneur, but the seasoning and maturity that you're bringing to the table to handle those different growth points or stages. Because a business that's in the red could potentially be the biggest gold mine for you if you have first of all, the tolerance, but also the know-how to strategically come in and turn that ship around. If you don't have that seasoning, then you want something that's at the top and that you can continue to grow incrementally and slowly in a safe way so that nothing breaks. And then you'll apply growth strategies as you learn. So I would say, it's really looking inside and what you're bringing to the table in order to enhance that business and selecting something that it's the correct maturity for you as the owner.
Yeah. Well said. Well said. And I guess with Celestial Group, you guys are really sort of, I would say, the cash flowing profitability is king, I guess, from what I've seen, from everything that I could find on you guys. But in
Mm-hmm.
terms of examples, what could you share with something that you guys have done in the past that you're really proud of, with an acquisition that you did or somebody on your team helped you with?
Yeah.
What could be an example that you could share?
I'm really proud of a transaction that we did that is for digital products. So it's actually spreadsheet products. And you're like, well, who cares about that? But the previous owner had done such a good job in setting up business systems and with the initial marketing that they'd done and how they had positioned it, that the brand was so ripe for massive growth and trajectory that we actually were able to attract very aligned investors because we laid out a business plan for how we would turn that company into a social movement.
Mm,
So I think that you can really put a spin and or positive positioning on pretty much anything that you do if you look for the right opportunities. So
mhm,
you can take something like a plain old spreadsheet company and turn that into something that really helps people by building community, by building appropriate social messaging around it. And that drives sales in and of itself because everyone loves to be involved in something that lives beyond them.
mhm. Yeah, and having a blueprint effectively that you can go after changing
Right.
something, making it a social movement is obviously like an extremely valuable like ability to do that.
Mm-hmm.
And as you mentioned before, bringing something like that to the table with marketing expertise and figuring out how to drive that top line up is
Right.
really really cool. So I guess with the next piece, I do always like to kind of talk about valuation and how you guys think about that.
Mm-hmm.
I think that there's unspoken things that people won't talk about with valuation, but with e-commerce, it's different than SaaS, and
Yeah.
then content businesses different than e-learning and
Mm-hmm.
information products. So, what's your take on valuations? I know it's way different now than it
Yeah.
was 2 years ago and a year ago, but
Right.
what could you share around valuations?
Totally. So I don't give a hoot how the big, massive private equity firms are doing it. And I know that that's not this audience, and people here are exceptionally intelligent in this audience and they're looking for deals, right? So please don't get hung up on valuations and market value because those statistics are always behind. It's pretty rare that the data that's available is entirely accurate to the nuance of each and every individual business that you're looking at. So I always look at down to the bottom line per month. What is discretionary earnings available? What is the cash flow that's moving through this business? How much on a monthly basis is available to reinvest back into the business so that it can grow and or pay out shareholders if there's any? And we can go months and or years without doing any shareholder or investor payouts. That isn't always necessarily the goal on the short term, but you really just want to look at the month to month bottom line versus like, okay, how much of a multiple per industry? Because the truth is that we are in an unprecedented economic time. We're entering black swan events with technology changing, faster than it ever has. So any historical data, it's not that it's irrelevant, it's just that the market is moving differently. We're applying new marketing tools. AI is changing everything. So awesome that everyone thinks that it should be at this multiple, like good for you. But that doesn't mean that you can't craft very favorable terms with a buyer and incentivize them in different ways if you have a great business plan and a strategy that you can apply to the business based on the bottom line monthly that you're looking at month over month and year over year.
Nice. Nice. I like that. That just because of what happened previously in their numbers.
Yeah,
You can't really extrapolate a evaluation. It's like uncharted waters right there.
totally. SaaS and ecom valuations are ridiculous.
Hmm.
Like they literally make no sense. So I look at the companies that are like 1 million, 2 million, 5 million. I'm like, bro, you're pulling in 10K a month. Get out of
Yeah,
here.
yeah,
Like,
yeah.
what? So that means I'm paying $2 million for $120,000 of cash flow per year. Take a hike. It doesn't economically make sense. And so that's why I'm saying really look down at the brass tacks per month of what you have to reinvest back into the business, because you're, as the owner, your responsibility is to the business longevity above everything else, right? So if the business can't survive, you won't survive as an owner. Even if you're a single owner operator, you don't have investors like we do. You have to think about that. If the business isn't around tomorrow, you don't either have a paycheck and or the earnings you were looking to get, right? So if you're striking a deal based on some market valuation, but there actually isn't the cash flow to support that month over month, you're losing. And the truth is that you make money on the buy.
Hmm.
So everyone remember that you make money on the buy.
You make money on the buy. I
Yeah.
like it. So let's talk a little bit about the social change piece. I haven't brought that up. I did some research on it and figured it out a little bit. I'm new to like the sort of concept of it, but with private equity, social change, what could you share around a young entrepreneur listening to this that really wants to get involved with
Mm-hmm.
something that is social change?
Yeah. Can you give me some context as to what social change is meaning for you so that I can answer this properly?
Uh, I would say like one of the ones that I've talked about a lot on the podcast is like women venture capital backing.
Sure.
Like I think it's 1% or
Yeah.
2% of all venture capital is going to women.
Mm-hmm.
And I've had people on the podcast where we've tried to think through how we can increase that to 5, 10, 20%, 30%, over the next 10 years. And that would just be how I'd view like social impact in terms of our society and
Right.
trying to use business to lift everyone up. But that's just my take on it. I know that that's part of your mission with
Yeah.
social impact, but
Yes.
what can you
Okay.
share?
So, hot tip for the audience as well here. If you happen to be an angel investor or an investor on the side of being an acquisition entrepreneur, uh, the literal statistics are that women and or female identifying founders typically return 40% more returns on their businesses than their male counterparts. No diss to the Silicon Valley tech bros out there. I love y'all. And when it just comes to the longevity of an M&A transaction and a potential exit that's actually going to happen, the prudence that women are applying to their businesses, statistically, they are literally outpacing and outperforming their peers. So I would sincerely like open your hearts and open your wallets, because those checks that you're making in women actually make a difference in our communities big time. When it comes to M&A and when it comes to acquisition, entrepreneurship, a way to enact social change in your buying business journey is to be open about it, to get help, and to do it in community. Like solicit your friends. Your friends and your family are always the last people to believe in you, because they actually psychologically are wired to keep you safe. So everyone's going to talk you out of like taking the big risks. But if you bring them along, we can actually help shift a mental health paradigm that has all of us wired, physiologically to live in fear and to actually live in upside. So yeah, you have to bear some of the risk, but you can actually also bear, the fruits of your labor if you're in on things together.
Mhm.
So going at it alone is an extremely difficult way to plow through acquisition entrepreneurship. There's a lot of communities now, but really, soliciting other people to take the journey with you just makes it a lot more fun. When we're having fun, the world's a better place, because you're probably, kinder to the person that just took your parking stall and or the person in the grocery lineup, because you're just having a good time.
Agreed.
Yeah.
Agreed. Well said. Well, that takes us to the finale question. Knowing what
Okay.
you know now, what would you tell Jennifer 10 years ago?
Oh, wow. I would tell her to play a lot bigger and to not be afraid. I think I would have entered acquisition entrepreneurship so that I could have made a lot of mistakes sooner and earlier. The best investments have turned out to be the worst investments. So the
Mm.
worst investments that I made have been the things that have paid off in dividends through either learning, wisdom, other doors opened, opportunities, connections made, assets to move about. So I would sincerely say play bigger sooner, because that's where you really enter an acceleration lane of a learning curve that sets you off into the next big thing.
Hmm. Well said. Well said. Well, those are all the questions that I have for you. Where can people learn more about Celestial Group and everything that you're working on?
Awesome, Steve. I usually tell everyone to head over to LinkedIn. I'm someone that is involved in so many different things. I run several different companies and have a lot of different passions. I'm very eager to mentor, help, and/or assist, entrepreneurs as required. So very open to a dialogue. You can find me on LinkedIn. It's Jennifer Pereira on there. I have a bright yellow profile photo, hard to miss.
Awesome. And for everybody that's listened through all the way to the end, you mentioned previously the psychedelics company.
Yes.
Can you tell us a little bit about that as a
Oh,
bonus for everybody that listened
yeah,
through?
I'd be extremely happy to. So I'm leading the build. I'm very excited, proud, and privileged to be the new CEO of Webdelics. So we are building the number one psychedelics platform in the world, making psychedelics accessible, relatable to everyone that wants to know more about it and find out how these special medicines can change their lives if it suits them, if it is appropriate for them. It's not for everyone. But for those that are curious about this, we're looking to provide a place where people can have agency in their lives to make proper decisions for them.
Very cool. Yeah, I
Thank
heard
you.
that there was I followed it quite closely because I think that it is a beautiful frontier that's happening. And there's like a proposition in California, I
Yes.
believe, the really big one that's supposed to kind of open it up. Or I guess they're the guinea pigs, and then other states will kind of follow. But yeah, it's a very exciting frontier. So I wanted to make sure that we got that in so that everybody could kind of learn that out. And what was the website for that?
Thank you, Steve. I so appreciate that. We're at webdelics.com.
Awesome. Awesome. Well, wherever you guys are listening on iTunes or Spotify, the links that Jennifer mentioned will be in the show notes. But thank you so much for coming on and sharing your story.
Thanks, everyone, and good luck on your biz buy journey. Bye for now.